Good day Forex trader. Your USD Forex signal, relief rally can't be ruled out. The pair will likely have a relief rally this week as the break and retest pattern actualizes. Bullish view. Buy the Euro USD pair and add a take profit at 1.1500. Add a stop loss at 1.1380. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1400 and a take profit at 1.1300. Add a stop loss at 1.1500. The Euro USD price is hovering near its lowest level since July 2020 as investors reflect on the rising American inflation and the potential for a tighter global tightening process. The pair is trading at 1.1443, which is about 2.2% below the highest level in October this year. Worries of stagflation. The US and Europe have transitioned from a COVID-related recession to a potential phase of stagflation. Stagflation is a period that is characterized by high inflation and relatively slow growth. For example, recent data showed that the American economy expanded by just 2% in the third quarter. This was a significant decline considering that the economy bounced back by more than 5% in the second quarter. At the same time, inflation has surged as energy prices and supply gridlock rise. Data published this month revealed that the American Consumer Price Index, CPI, rose by 6.2% in October. This was the highest inflation level since 1991. Therefore, while the unemployment rate is falling, the American growth rate is still under pressure. As such, there are worries that inflation will stay at elevated levels while the overall recovery will remain slow. At the same time, the Federal Reserve will likely accelerate its tightening program in a bid to tame the runaway inflation. Indeed, the bond market seems to be preparing for more tightening. The 10-year bond yield has risen to 1.57% while the 30-year yield has risen to 1.938%. Meanwhile, the Euro USD pair has also dropped because of the rising number of COVID-19 cases in some European countries. Germany has continued to see elevated number of cases in the past few days. Similarly, countries like Netherlands and Austria have also announced some curbs to tame the disease. Euro USD forecast. The 4-hour chart shows that the Euro/USD pair has been in a major sell-off in the past few weeks. The pair has managed to drop below the key support level at 1.1532, which was also the lowest level in October. This price was also along the neckline of the head and shoulders pattern. It has also moved below the 25-day and 15-day moving averages. Therefore, the pair will likely have a relief rally this week as the break and retest pattern actualizes. This will likely see it retest the key resistance at 1.1500. GBP USD Forex signal, cautiously bullish ahead of key data. The pair will likely hold steady as investors attempt to move above 1.3540, which is along the standard pivot point. Bullish view. Buy the GBP USD and set a take profit at 1.3540, pivot point. Add a stop loss at 1.3350. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3380 and a take profit at 1.3300. Add a stop loss at 1.3450. The GBP USD pair is holding steady even as Brexit risks rise and as traders wait for major economic numbers from the UK. The pair is trading at 1.3418, which is about 0.45% above its lowest level last week. Fresh Brexit risks. The biggest risk for the GBP USD is the fresh Brexit risks that have emerged in Europe. On Friday and during the weekend, the UK and the EU fired up the rhetoric about Northern Ireland. The UK, led by Boris Johnson and David Frost, have argued that the Northern Ireland Protocol keeps the region inside Europe's single market. The two have asked for fresh talks about the region. In a statement, Frost said that the UK could trigger Article 16 of the protocol. By so doing, the two sides would move into a trade war, which would have serious implications for the two sides. The UK has demanded that the European Court of Justice should be removed from any regulatory role in the protocol. Meanwhile, the GBP/USD is holding steady ahead of key economic data from the UK. On Tuesday, the Office of National Statistics, ONS, will publish the latest UK jobs numbers. Analysts expect the data to show that the country's unemployment rate declined to 4.5% to 4.4%. Average earnings with bonuses are expected to have increased by 5.6% in September. The ONS will also publish the latest UK consumer inflation data on Wednesday. Like in the US and Germany, analysts expect the data to show that the UK inflation jumped to more than 4% in October. Core inflation is also expected to rise from 2.9% to 3.1%. The ONS will also release the latest UK retail sales data on Friday. GBP/USD forecast. The 4-hour chart shows that the GBP/USD pair has bounced back to 1.3418, which is slightly higher than the lowest level last week. This level is also important since it was the lowest level on October 1st. At the same time, the pair has moved below the 25-day exponential moving average, EMA, and the Ichimoku cloud. It is also between the descending channel shown in purple and is above the first support of the standard pivot points. Therefore, the pair will likely hold steady as investors attempt to move above 1.3540, which is along the standard pivot point. On the flip side, a drop below 1.3350 will invalidate the bullish view. AUD/USD Forex signal, relief rally to continue ahead of RBA. Bullish view. Buy the AUD/USD and set a take profit at 0.7450. Add a stop loss at 0.7280. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7300 and set a take profit at 0.7200. Add a stop loss at 0.7400. The AUD/USD pair was relatively unchanged on Monday morning even as tensions between Australia and China rose. The pair is trading at 0.7330, which is slightly above last week's low of 0.7278. The pair is about 3% below the highest level in October. Australia and China tensions. China and Australia have a close trade relationship. China buys more than 70% of all goods sold by Australia. At the same time, the country buys most of the services that Australia offers, including education and tourism. However, in the past few years, the relationship between the two countries has been relatively difficult. The situation worsened when Australia supported an investigation into the cause of COVID-19. Since then, China has implemented a ban on Australian coal and put limits on other goods. The relationship worsened during the weekend when Australia's defense minister pledged that the country will support the US in a campaign to defend Taiwan. This happened as China's military continues its operations near Taiwan. The statement came about 2 months after the country angered China by teaming up with the US and UK in a trilateral security partnership. The deal will help Australia build nuclear-powered submarines in a bid to counter China. Meanwhile, the AUD/USD pair held steady in reaction to a statement that Xi Jinping and Joe Biden will have a virtual meeting soon. The meeting will seek to iron out some of the current challenges between the two countries. The Australian economic calendar will be relatively muted this week. The only major item to watch will be the latest minutes by the Reserve Bank of Australia, RBA, that will come out on Tuesday. The pair will also react to the latest US retail sales and the rising US and Australian bond yields. AUD/USD forecast. The 4-hour chart shows that the AUD/USD pair moved below the lower side of the rising channel shown in purple a few weeks ago. The pair has dropped sharply since then. As a result, it moved below the short and longer moving averages. It has also moved slightly above the 61.8% Fibonacci retracement level while the MACD has made a bullish crossover pattern. Therefore, the pair will likely continue the relief rally in the near term. This will likely see it retest the 38.2% retracement level at 0.7410.